Hey guys, what's up? Welcome back to another video. In this video, I'm going to be talking about a stock that recently announced earnings in the fourth quarter and full year of 2022, and that stock is Lockheed Martin. And we can see that over the last year, Lockheed is up around 21% in the same time period that the S&P 500 is down 7%, so they are outperforming the market over the last year. And so in this video, I'm just going to look into some of the recent news that's come out surrounding Lockheed. I'm going to look into their financial statements to get a better understanding of their financial health. And then lastly, I'm going to use a discounted cash flow model to figure out the intrinsic value per share for Lockheed so we can know if this is a good price to buy into the stock from a value investing perspective. And so right here, we can see in this article, they point out that the Navy awarded Lockheed Martin a $1.2 billion contract for hypersonic missiles. As they point out in this paragraph right here, the main purpose of this deal is to integrate Lockheed Martin's products with the Navy's Zumwalt-class destroyers, which is a deal that was awarded to them on Friday. And so a part of this February 17th contract also includes additional rounds and canisters for the Army for Lockheed Martin to provide. And if they were to completely fulfill this contract and all options were exercised, that would amount to about $2.2 billion worth of revenue for Lockheed Martin. So definitely some interesting things in the pipeline coming up that could positively impact Lockheed Martin's earnings and revenue growth. And so right here, we can see their income statement comparing the last 3 years of 2020, 2021, and 2022. We can see that from 2021 to 2022, total sales are down from $67 billion to $65 billion. And we can see net earnings are down from $6.3 billion to $5.7 billion. So not the best year for Lockheed Martin, seeing as our revenue and sales actually declined year over year. Next, we can see in their balance sheet that their total assets increased from $50 billion to $52 billion, and most of their business is financed by liabilities compared to equity. They have $43 billion in liabilities and $9 billion in total equity, with about $16 billion in retained earnings, and that's actually decreased from $21 billion, and that could be as a result of them returning a lot of value back to shareholders in 2022. But as it stands right now, they have less capital on their balance sheet to distribute to shareholders in the future or to reinvest back into their company. And so lastly, right here, we can see their cash flow statement. For 2022, operating cash flow came out to be $7.8 billion, down from $9.2 billion year over year. And we can see they've returned a pretty substantial amount of their operating cash flow back to shareholders here. They returned around $7.9 billion of capital to shareholders by repurchasing common stock, and they paid out dividends of around $3 billion. So that's about $11 billion returned back to shareholders in a year where they only had around $8 billion of operating cash flow. And we can see the trend here starting off in 2020 to 2022 now, from $1 billion to $4 billion to $8 billion, 2.7 billion to 2.9 billion to 3 billion. So returning value back to shareholders definitely seems to be one of the priorities for Lockheed Martin here. And so right here, we can see this discounted cash flow model to figure out the intrinsic value per share for Lockheed Martin. Yahoo Finance is estimating that it's going to grow at around 9% compounded annually for the next 5 years. They had around $6 billion worth of free cash flow for their most recent full year, and around $14 billion worth of net debt on their balance sheet with 255 million shares outstanding. That puts their intrinsic value per share at around $308 per share, which means that they're currently not trading below intrinsic value per share since they're trading at $480 per share at the moment. And so on the right-hand side here, we can see comparing them to some of their competitors in this industry, Boeing and Raytheon. Across the board, it looks like Lockheed Martin is probably doing a lot better than Raytheon Technologies, as the only exception is really the gross profit margin, with Raytheon having a 20%, Lockheed at 15%. But Lockheed has a better net profit return on assets PE ratio and a dividend per share of $11.40 per share compared to Raytheon's $2. And Boeing here isn't even profitable. So from a competitor analysis perspective, looks like Lockheed Martin is doing the best in this industry compared to these other two companies. And lastly, I wanted to compare them to some of the other companies we've looked at in prior videos. We can see that Lockheed Martin is coming in around middle of the pack with all of these tables here. In terms of share price to intrinsic value, they're trading at around 1.55 times their intrinsic value per share at the moment, 308, and they're trading at 480. In terms of growth rate, at a 9% growth rate, Netflix still holds the number one spot at 16. Profitability ratios, Lockheed Martin comes in dead last at gross profitability with 15%. Adobe is number one with 90%. And net profitability, Lockheed Martin is also around bottom of the pack at 8%. Microsoft is first place with 36%. And then in terms of return to shareholders over the last 5 years, in terms of stock performance, Lockheed Martin has a 33% return over the last 5 years, and Microsoft is still holding the number one spot at 191%. So in comparison to the other companies we've talked about, looks like Lockheed Martin is around middle of the pack across all these other videos. In terms of their industry, they look to be doing the best in comparison to Raytheon and Boeing. And then in terms of this intrinsic value analysis here, this discounted cash flow model, they are not currently trading below intrinsic value per share based on these growth rate estimates. So I'm not too sure what to think of Lockheed right now. Let me know in the comments section down below what you guys think. Is it a good buy or a sell right now at the current share price? Let me know what you guys think in the comments down below. Leave a like on the video, subscribe to the channel, and I'll see everyone in the next one.